Well, HCL Tech has come out with its numbers. Those numbers will flash at the bottom of your screen in just a few minutes from now, but it's on your screen as we speak. 33,872 crores, 6% growth on a QOQ basis on the top line. And we've seen a very decent set which is coming out from HCL Tech. Constant currency awaited, of course, but outside of that, you look at that EBIT number, it's gone up by 14.2% on a QOQ basis, and therefore you've seen margin uptick. The expectation was a margin number of around 18.1 to 18.2%. It's coming at 18.6%. So it's a huge beat where margins is concerned on HCL Tech. QOQ, of course, as you can see on your screen. Profitability, well, that number is impacted by a 956 crore provision number, which is the impact, the one-time impact of the new labor code implementation, and that's what has impacted HCL Tech's profitability, which is a tad bit below estimates. But on the top line and on the margin count, it's surprised on the upside. Sandeep Agarwal, fund manager at Sovilo, joining us. Sovilo investment managers joining us this evening. First off, Sandeep, great having you here. Let me first start off by understanding how you're looking at HCL's numbers. Talk to us about the initial feeler. How do the numbers look?
Hi, good evening, and thanks for having me on the show. So, as you mentioned on the numbers on the right now, the rupee revenue is definitely much ahead of estimate. I think around 6% quarter on quarter. The estimate was around 4%. So, but naturally, the CC growth number and the dollar number will be also good. And even EBIT margins, I think, are 20-30 basis points higher than the street estimate. So they have done a good job there as well. So no doubt this is a better number than what was anticipated. Also, there was a delta from, the product because PNP business in this quarter generally is the strongest. So I think definitely they have also benefited from that. But having said so, no complaints you can say from seeing the numbers.
Well, it's a huge beat on the margin count, Sandeep. What does this do? Because you've got a 130 bip margin jump on a QOQ basis. I don't think anyone was penciling an 8.6% margin number.
I think the estimates which I have gone through, we have seen, you remember that last year during this time, the margin was at 19.5 and last quarter it was 17.4. So there was a expectation as the cost rationalizes and also the seasonality of the software PNP business. So 18.4 or 18.3 was something which I think was everyone's expectation. They have done 20-30 basis points better than that. Obviously, PNP are high margin business and the operating leverage is very high. So if there is a beat on the revenue from that side, there is obviously a beat on the margin. So I think the dollar revenue is also 50 million higher than what was anticipated at least. So obviously, the operating leverage is very high in these businesses.
In fact, the constant currency services revenue is up 1.8% QOQ, but really it's the constant currency revenue which is up around 3% YOY overall and 4.2% up sequentially. And that's where I think the beat is coming from, right, Sandeep? So it's not just the currency tailwind they're seeing. The 4% the constant currency growth also is very impressive for the base that HCL Tech has.
Correct, absolutely. So, it is a better number and obviously product and platform has done the task for them. And even the services X of product and platform is decent number. So, no doubt about it.
Consensus viewers for perspective was a 2.2% constant currency dollar revenue growth. It's come in at over 4%, and that's where some part of the beat is coming from as well. In fact, revenue was expected at 33,262. It's come in at 33,872. So there's a 400 to 500 crore beat that's coming over there as well, which has gone through to EBIT. It seems a part of it has gone through to EBIT, around a 280 crore delta, which has come into EBIT as a result. Obviously, profitability slightly subdued because of that one-time impact, but otherwise profit also would have been ahead of estimates. Sandeep, this profitability angle, talk to us, this new labor code implementation. It seems the street hadn't built it in. Give us a sense as to why that is so, because we saw it in TCS as well. We saw it now in HCL Tech's numbers. Have we not built in, or have analysts not built this number in terms of the new labor code?
So it is very tough to build in because,
Okay.
the date from it will be applicable. What is the basic salary? So it is a basic salary, for example, ranges from 30 to 50%. So first of all, it is very challenging to put a number. There are different level of salaries, different basic salaries. So it is a mathematical thing which company can only at best guide. So I think it has to be treated as a one-time plus or some component of it will be recurring. And that I think company is the best source to give. We do research on so many companies for our PMS also, and for us also it is a approximation. We can't find out exact number because of two reasons. One, we don't know how many employees and which salary bracket, and again within that, how much is the percentage of basic salary for each of these companies. So it is very tough to do that math.
I take your point. Now, 3 to 5% growth is what HCL Tech had maintained for FY26. This 4% has come as a bit of a surprise because it's sequential as well. Do you believe that growth will likely surprise on the upside for full year FY26 for HCL Tech? Because this 4% growth looks very strong.
So, we have to hear from the management what they have to say for the next quarter for the current quarter, because in the past, when I was covering the sector as a sell side analyst, I have seen that, sometimes the past numbers are very good, but, the current quarter may be little shaky. So it is best to, hear them out because they will have the best information on how to look at this current quarter numbers. And obviously the current quarter numbers will end up, giving you the final number for the year. So in my opinion, that will be the right thing to do.
Right. Sandeep, you also have obviously a very good eye on ground. What is your read-through of TCS's numbers? Give us a pulse of that.
So even in case of TCS, I think the numbers were broadly in line. So no negative there. But yes, these are all, very matured companies, very high growth. The high growth stage has actually passed, and also they are facing competition not only from the disruption of AI through reduction in efforts, but also the right to win for them, which was primarily the size-based right in participation in deals, that has gone away. That is the most important thing. Now they are also like competing with everyone else in the space. All mid cap, small cap, everyone is able to compete because the size of the deals have gone down and execution timelines have come down. So it is no more a space for only one player. Everyone is allowed to participate. So that is the biggest challenge all the large caps are facing in India today.
Okay. All right. Sandeep, thank you so much for joining us, giving us that perspective with regard to how Q3 numbers have fared according to you. But HCL Tech clearly looking like a beat in terms of the overall numbers. With that, viewers, we'll slip into a very short break. We'll continue coverage on the other side. Thanks for staying tuned.